TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Dow up 724. NASDAQ is up 254. S&Ps are up 80 at 28.27. If you were around pre-market, folks, the S&Ps did go up limit, 130. Pretty wild. Gold contract down $20, trading $16.55. We have silver off 10 cents, $16.94. Both gold and silver, bottom line, held up big time, folks, in that downdraft yesterday. Sometimes they do, sometimes they don't, but they held up, and they held up in a big way. Oil up 258, trading 33.73. That still has big problems. And we hit 27 yesterday. 27 is game once again. Notes and bonds, you get the 10-year down one tick, trading 138.05. The 30-year off 3 points plus 6 ticks at 183.24. Both notes as well as bonds, folks, they were in that ABC structure on the way up on price, down on yield. They hit their price projections. After you finish an ABC, folks, most times you're going to reverse direction. It's not reversing trend. You hit your price projection. You back down. We're backing down with light volume. These babies are building cars again, far higher price. I expect next few days they're going to pull back. Bottom line, take a rest, then take off once again. King Dollar's up 917 ticks at 95.12. You got the euro at 113. Yen is at 104.5, and the pound is at 130 to $1 US. Let's go over to our man, Mr. Kevin Hinks, TD Ameritrade, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, the futures market. You want to understand defined risk, which you better get your head wrapped around quick. Great program. If you haven't test-driven yet, the Thinkorswim platform, outstanding platform. You're sitting there right on the website right now. Hit the button. Bring it up to allow you to trade with paper money each and every trading day. Ride 'em, cowboy! I'm telling you, man.
Buckle up, everybody.
Holy cow. Seriously, right?
Yeah, these are, I don't want to say they're unprecedented times because we've had bigger percentage movers, but these numbers are big, Tom.
They're big.
And the pace and the the velocity of how these markets are moving are pretty unprecedented. The high frequency markets have these markets, and they're moving them quicker than they ever have. But that doesn't mean a well-defined, fundamentally sound trader can't pick their spots and do okay in these markets and, take these volatility. Now, you guys hear me talk about the rule of 16 in terms of the VIX,
yes,
right?
Yes.
And how a 16 equals 1%,
yep,
a 32 equals 2%. Well, guess what a 48 equals? 3%.
Yep.
So, and guess where we are in the VIX right now? 48.
How cool is that?
Now, it doesn't stay there very long when it's there, but there we are.
Yeah.
And so that implies and really exemplifies the amount of volatility that's in these markets right now. A 48 VIX implies a 3% move a third of the days.
It's amazing.
So,
and it's amazing,
You're looking at pretty volatile times. Go ahead.
And what's amazing is that, so picture, folks, okay, I've been in plenty of limit up and down markets, okay, over the years. But most times what has happened in the S&P, I've really been in limit down markets. This is the first time, in the regular commodity market, you see that limit down, limit up. I think this is the first time, Kevin, that I saw that we got limit down yesterday and limit up in the S&P today. I think that's the first time. Because it seems like limit up is harder in the S&P than limit down.
Yeah, I don't think that I've ever remember.
Yeah.
Remember, that yesterday was the first time we hit those limits in a long time.
Yes. Yes.
Where we actually, in an open market,
right,
where we haven't. So these are, this is volatility that is, it's not unprecedented. We've never, if you've been in this business long enough, you've seen things like this. And I brought it back to when I was trading the drought of 2012 in grain.
Okay.
And the real things that people can take out of this is these markets and the media, they talk about worst-case scenarios, and these markets love to go to worst-case scenarios.
Yes.
And rarely, Tom, and you know this, rarely does the worst-case scenario ever play out.
Right.
It gets bad,
Right.
and they discount things extremely, exponentially. But they never get to the worst-case scenario. In 2012, they basically discounted the grain market to a 20% crop.
Wow.
And you know what it ended up being? An 80% crop.
Wow.
And so these farmers got to sell 80% of their products for double the price.
That's amazing.
So, yeah, any tag days you were having for the farmers back in 2012 in the drought, don't. They did very well. But now the farmers have big crops and the prices are low. But what I'm saying is these extreme situations, they never seem to play out as severe as the markets discount for. And that's what investors have to take from these extreme moves.
And, what I'm really digging, Kevin, is that, we know that, the debacle, the virus started in China. If you look at the Chinese markets, folks, okay, they're way off their bottom. Okay.
Yeah.
This is
they're 2% from the top.
Totally, man. This is a monster heads up for us because it looks to me that the market is recognizing that. So let's picture, this would be like a 2.5 month deal. Like I got Xinjiang up right now, folks, which is like our NASDAQ, okay? It hit a low of 1552 on February 4th. Well, we're at 1887. And if this thing's ready to break a consolidation that it's actually been in for years, which is a mind blower, man. And
Tom, you are giving your viewers the perspective that they need to have in these markets, which is if you need to look in the future, if you need a crystal ball looking to the future, look at China. Totally. That's where all this started.
That exactly.
Number one, I don't expect the U.S. to get as severe as China.
Right.
And number two, there's the roadmap for how this is going to come out. And guess what, Tom? Well, you know what the U.S. is better at than any other country? Defining a problem and throwing money at it.
Right.
Throwing extra money at it. And that's what you're going to start to see from the U.S. They're going to surround this thing. So I just don't think, in terms of, catastrophic events on the U.S. economy, I don't think this is one. I think it's going to be a temporary thing. Just my opinion, and I think we're going to come out of this fine. And, oh, by the way, the economic data that we're seeing that's getting ignored by these markets is spectacular.
Yeah, and it's wild. So picture this. It looks to me, Kevin, right now, this is, if we hold here, which I think we're going to, all right, well, you could go into a 20% consolidation. Now, that's a monster consolidation, but because we went down so fast, okay, it'll be a trader's paradise, folks, okay? Because if that goes on for a year and a half, which is possible because we went up so exponentially, that's a strong market, man. That's, it's going to be really intriguing watching this play out. And, as you just said, with the amount of money, we know the money's going to be getting put in. We know we have a great medical system. So bottom line is that, we're probably maybe at the beginning to the middle of this, folks, but we're talking another 6 weeks or something. So the market might already.
And remember this, Tom, as simply as I can say it. Higher implied volatility means higher premium and options, means higher levels of theta and decay on a daily basis.
Right here, folks, 45 minutes from now, outstanding program. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, Tom.
Thank you. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 760, Nasdaq's up 280, S&Ps are up 85. And don't forget, folks, at TFNN, bottom line, right on the front page, every trading day, you get the morning market kickoff. Tommy writes this up at the end of the day as well as the beginning of the day. And, of course, we get so much action out here. Great take, very fast Cliff Notes version of markets, what they're doing pre-market. So a great read. Every afternoon, every morning, just go to TFNN.com. You're going to see the morning market report right there. Now, as we were just talking with Kevin, what's important so this is what ends up happening with downdrafts like this, too, folks. You can really find out a lot about the strength and or weakness inside the marketplace. We've been talking about the aspect that you get the NDX 100, NASDAQ Composite, totally the strongest, S&P next, Dow Industrials next. Now, inside of that, what we also can see, and I'll put this up worldwide, you can also see that our markets basically are much stronger than the European markets. What has happened out here today, okay, well, we'll see if Europe can catch up with us. I suspect it's not going to, because I'll show you in a second how they broke their lows tremendously different than, not tremendously different, but they broke them different than we did. So what you have in Europe this morning, Europe is up from like 1.6% to 1.9. Well, we're up 3.1 to 3.5, and NASDAQ is leading the charge once again. 3.5, and NASDAQ's up, S&P's up 3.1, Dow Industrial's up 3.1. It's important in the context when you're looking at that as to where we are in the marketplace. So if we go over to the NDX 100 and we take a look at the NDX, what you're going to see here, and I'm going to bring this all the way back to, because the benchmark, folks, in all the indices is the December 2018 downdraft. That's your benchmark as to, people talk about support, resistance, and all of the above. That is the number that you want to keep an eye on. The reason being is that was the last big downdraft that we got. The S&P hit the top of that. Well, the NDX, folks, didn't even get close to it. The top of it is 7106 for the NDX, and we made it down to 79. So the NDX itself, okay, bottom line, didn't get close to it, number one. The NDX also did not get back inside its lower trading range. So what does that set up? Bottom line, that sets up, number one, that it's going to basically try to get back into its highs. Yes, you heard that right. Okay. Now, it very well could be a monster consolidation. That's what I said to Kevin. It would make sense, by the way, that it would be a monster consolidation because we were down 20% in all of what? I don't know, 2 weeks, right? That's probably one of the fastest downdrafts in history. Okay, it's pretty close to it. Okay, that being said, what you have now is this. So picture how this market's setting up right now. You have a downdraft that's taken place. You get a bounce that's going. The catalyst for the downdraft had to do with the coronavirus, no doubt about that, stopping cash flow. That being said, the bottom line is that we had extended ourselves way too far anyway, okay? So if markets are going to recharge and recalibrate, this is how they like to do it. Now, they certainly don't like to do 20% in 2 weeks. That's what we got, but you got to pay attention to that because the bottom line, sometimes 20% can take 6.5 months. In this particular case, it took 2 weeks. That's a heads up all around. And where I'm going, now I'm going to go fundamental on you for a second. And this is what is really wild. So picture this. We had the note and bond market finish their ABC structures on the way up and price down on yield. The way that they're still trading out here today, they're pulling back with tremendous amount of volume. So that's telling me that low rates are here for a long period of time. That's the first part. The second part has to do with, there's no doubt that when we're looking at major markets, when we're looking at major companies, the bottom line is that the cash flow is going to get hurt. Some of the smaller companies are really going to get hurt, okay? So now the question is, okay, how do the markets, not just the markets, how does the folks that aren't in the markets across the U.S., how is it going to hit them, and how is their cash flow? Because that's what's really important. The aspect of how we went up and the aspect of how our economy is going is basically two different deals. We know that there's for the amount of people that are actually in the United States, there's a small amount of people that are actually in the marketplace. Okay, you do have the 401ks, but when you basically divide that up, there's plenty of folks that are not in the marketplace that drive the economy. So what I expect we're going to see now is that you are going to get stimulus in the marketplace. So realistically, you're going to get stimulus inside the marketplace, meaning we'll see what kind of plans they come up with. And even if it's, you know, I suspect there's going to be loan programs, there's going to be SBA programs. They're going to have to come up with something. Who knows what they're going to do with the airlines? That in itself is going to put more bread into the marketplace when, in fact, there's more cash in the marketplace still that knows what to do with, you know. So it's going to be intriguing watching how this whole thing shakes out. Let's go over to the housing market, because what you are going to have, with the rates that are this dramatically lower, folks, you are going to have, more acceleration up in the housing market, particularly because of the way that the stock market moves. There's going to be plenty of people that get fed up once again that, you know, you can be in the stock market for 4 or 5 years, you get the gains, and they took it away in basically 2 weeks, you know, and that's real. There's no doubt about that. That's how this shook out. If we take a look at Lennar, what you're going to see with Lennar, you bring this back. Lennar right now has been in this large trading range. The top of this range is out here is 68. You're at 57. Well, it's going to go for it again. It's going to go for it. And let me show you something. I want to show you something about the aspect of, depending where these home builders are in the context of how much they're selling. So Toll Brothers, on average, is the higher-end builder right across all markets. And you're going to see Toll Brothers, okay, the bottom line is that the high in Toll Brothers in 2008 and 2005, rather, was $58. Well, we never made that, okay? Bottom line, Toll Brothers, you know, you can make the case that Toll Brothers is trading back where we were in 2004, you know, and their average selling price, folks, is $800,000. That, to me, you know, that's people that are in the marketplace, number one. Their portfolio got hit. They're not going to sell more homes. And on top of that, they are in big cities as well as California. So they're in high priced areas that basically are already overpriced. We take a look at Pluti. Okay, so you take a look at Pluti, PHM. That's trading at 39.30. I believe this is 300,000 or 4. Let's see. This is 425. Their average price is 425. You take a look at 425, and what you're going to see when we bring this back, you're going to see that this baby. There we go. Okay, this baby here. The high that was established out here in 2005 was $48, and we made it up to $47.37. This is in a much better situation, but you can see the aspect that your average price has gone from $800,000 down to $425. When we come back, I'm going to give you the strongest housing equity out there, and what it is, their average price is $300,000, and with mortgage rates going down, there's plenty of people that could afford $250 last week, and guess what? They're going to be able to afford $300. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 600, NASDAQ up 244, S&P's up 70. We're talking about the housing market and DHI. DHI, folks, this would be the equity that you want to look in if you're going to step your foot into the housing market at all. This is DH Horton. Okay, the low for the year is 38, the high is 62. You got a PE out there of 9, and if we take a look at this, what you're going to see is that this is not only, this is right at, let's see, bring this back 15 years. What you're going to see, I got to bring it back actually more. What you're going to see out here is that this already blew away its high of 2005. That's $42. We got up to a price point of $62.54. You pull back, and we pull back into this, $49.75. The main reason that this is the strongest equity, number one, is that their average selling price, folks, is $300,000. They push a huge amount of product out, and guess what? They have a huge presence in the Midwest as well as the South and the Southwest, and they're monsters in Florida. So the differential, okay, is this average selling price. Why? Because the average selling price is $300,000, and what we're going to see here is because of the lower rates. You know, we'll find out from my man, Mr. Bud Spriggs, this week, what he's quoting this week. Last week it was 3.25. I expect it's going to be closer to 3% inside the 30-year mortgage market, conventional market. That accelerates it brings up the price that folks can actually buy. And on the lower priced houses at 300, you know, figure that's the average. Well, there's going to be 200, there's going to be 175, there's going to be 225. That's going to allow many more people, many. When you start looking at the numbers, it's exponential actually at that lower end, how many people can actually afford a house. So it's going to be intriguing watching this whole thing shake out. But that would be the number looking at that business in general. And I suspect what we're going to see out here, because this thing was so fast and furious, there's going to be plenty of other folks that basically will pull the trigger because at 1 second, you know, the bottom line is that you have a portfolio that's up. The next second, you have a portfolio that's down. In particular, this is pretty wild. So picture that when we're actually even selling houses, what ends up happening is that we're always looking for proof of funds, right? So let's say if someone comes in, we're looking for proof of funds and proof that they can get a mortgage before we would sign a contract, right? So what happened even a couple of weeks ago, we're moving a product, we're moving a house out, and the bottom line is that sometimes, not all the time, this would be really almost 1 out of 10, that the proof of funds is actually a portfolio. Now, that, you know, I happen to be lucky that I'm in the marketplace, period, and then we're in the real estate market too, but being in the marketplace is really helpful, being in the real estate market. The reason being is as soon as I saw the portfolio, I said, oh my God, okay, nice portfolio, $500,000 portfolio. Bottom line, woman signs the contract, and I'm looking at one of my other partners, and I'm saying to myself, this in the real estate business, I says, oh man, I says, this market, you know, wants to take a hit. Who knows? They took a 20% hit. I'm looking and say, okay, so there's a $500,000 portfolio that goes into a $400,000 portfolio. And then the real question is she going to close on the house? I don't know yet. That's the bottom line. But I'm just bringing that up in the aspect that it's important to understand. Well, the good news is that now it's back up another 4 or 5% today. But what does happen, I suspect there's going to be plenty of people that are in those situations that are still in really large winning positions that may decide that, okay, listen, I want to get a unit or 2 units as an investment that I can depend on a rent structure coming in to pay for the place going into the future. It doesn't mean that the real estate won't go up or down. The differential is that you don't know when it's going up or down. And the differential, realistically, inside the real estate business is that if you make it through downdrafts and you're getting rents in to pay the cash flow, most people are not buying a $200,000 house and then turning around and selling it 6 months later for $160,000, which happens all day long inside the stock market. It's a different animal. You don't know the structure. Well, you do know the structure, but you're speculating what it's worth at certain times. So it's a different structure for sure. The price discovery is totally different. The stability, however, if you are collecting rents, I would argue that is more stable. So it's going to be wild watching this whole thing shake out where we are. Right now, we get the Dow up 64, the S&P is up 64. Let's go take a look at those S&Ps, because as I said a little bit earlier, that's cut in half from this morning, and that totally makes sense. You want the volatility to basically stay out here today, and you want the market to hold if you're looking for a higher price. And I expect it's going to hold, by the way, okay? What you have out here is that we hit the 130 up, and that was at 6:40 this morning. 130 up inside the S&P futures. That was 5% in the overnight session. That's how it works. So the first limit up or down is 7%. It's 5% overnight. We hit that. It stayed up there for about 20 minutes, and then basically you start selling into it. We come down, and where we come down from, folks, which is pretty cool, is that we come down to the highs that were established out here on the first downdraft out here yesterday. And the first downdraft, you came down with some volume. You came down with 8,500 contracts. Then you tested that area with 6,500. Now, I'm doing this on a 10-minute chart. So that test was dramatically lighter. We bounce again, get all the way up to 28.42. Now we're coming into this area again with light volume. So I expect that whole area looks to me like it's going to hold. It'll challenge it, you know what I mean? It could dip below it and then come right up above it again. And then the real question is going to be, how do we go back up into the higher price? So your band out here right now is 28.42, and your lower part of this is 28.03. Right now you're at 28.05. You hold. And guess what? The longer that we hold and the longer that we keep pushing into 28.42, the higher the probability is that as we come into the close out here, if this thing gets over 28.49, you will see us finish at the highs of the day today. And if you finish at the highs of the day, you will get follow-through out here tomorrow. That's how this thing shakes out. If we finished right here, it would be basically a toss-up. Which way are you going to go? You finish at the high of the day, whole different ball game. That would be saying that flat out this thing's going to run. It would be also saying that too many people are on the wrong side. And it doesn't take a lot of buying, folks, to get to higher price when we have had a flush down like we've had in the marketplace. That's kind of how markets set up in general. If we go over to the Dow Industrials and we take a look at the strength versus the weakness inside the Dow Industrials, what you have out here point-wise is that we have Apple putting the most points in, 84 positive, Goldman putting 64, Microsoft 49. Stay right there, folks. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up 489, Nasdaq up 211, S&P's up 56. Let's go to our man Jim from Minneapolis, but he is in Cape Coral, Florida right now. What's going on, brother?
Hey, Tommy, just taking it by storm down in Cape Coral, enjoying the weather.
I'm glad you got on the plane, man. That's a beautiful thing, man. Totally.
Yeah.
It had to be a tough choice, right?
There was no shortage of people.
I'm sorry, what?
There was no shortage of people on the airplanes. It didn't look like any, slowdown there. That's for sure.
That's interesting, man. Yeah. No, listen, man. And now you're. Hey, listen. It'd be a good place to get stuck if you get stuck, man.
Yeah, we're going to be here 3 weeks anyway.
Oh, so cool, man. So cool.
But I think you're right with this housing. With interest rates where they're at and the really low supply of available housing and. I think, in the pent up, after this stuff blows over, I think we're going to have a massive back half of the year and consumer on all fronts is the way I kind of see it. So.
I can see it. I agree. I can see it, man, because the economy, the cash flow is out there, folks. People still aren't over their head debt-wise, which that's what causes every type of big recession. And I don't see it. I just don't see it, man. The people are not using their houses as their piggy banks and buying boats and cars and all this stuff. It hasn't, because it's still been tight enough in that market, and I hope it stays tight like that, because the mortgage market and the fraud that was in it in 2008, folks, and most. If I go even back to 1994, that's what happened. You have the savings loan debacle. Most of the time, it turns into the mortgage market fraud, and then all of a sudden, everyone gets hurt because there's so many people that basically got money that basically shouldn't have got the money, and then it basically takes down the whole economy. So there's no doubt.
Gotcha.
So this is an interesting stock you're looking at, right? It's IIPR. And what this is, folks, okay, this is in the industrial space. They're owning, leasing real estate assets in the industrial space, depending on the cannabis industry. So the low out here is $66. The high is $139. And, of course, in that industry in general, you're going to have high volatility. There's no two ways about that. But I like the setup, Jim. And what happens is this, folks, okay, this is a specialty. There's no two ways about it. Well, here, let's talk about technically first. Technically, you get a nice high volume high out here at 137. You're at 85. You got strength in this equity going back to January again. We went topside on a weekly basis with 4.1 million, and now you're going to get a rejection of lower price, this week. So, it looks to me like game again is like 108 in this baby. And what you do have in general, this is what's kind of cool, I think, about this play, Jim. is that let's picture that the worry would be, folks, okay, if you look at the cannabis stocks, okay, is that they've got smoked. Some of them are not going to basically be able to stay in business. So if you're dealing with one that doesn't stay in business, well, guess what? There's going to be another one right behind you, number one. That's the first part of the industrial space. The bigger part of the industrial space, though, is that industrial space in general, folks, is in favor in a huge way because of the amount of space that companies need, the amount of ghost restaurants that are being made across the country. And a ghost restaurant, folks, is that you just take a big industrial space, you take 30 or 40 different concepts inside one industrial space, and people aren't going into them. They're using it for delivery going outside. So the space itself is great space, Jim. You know, there's no doubt about that, man.
I've ended up trading this thing 2 or 3 times just because of the volatility of this thing.
Yeah, that would make sense. That would make sense. You know, there's no doubt about it. And you can see in their numbers, folks, they you know, they're out of San Diego. They have the growth. They started 2017, 6.4 million. This year they're doing 44 million. You know, so they have it. And of course, they're, you know, that's. Right now, they're in states that is legal, but guess what? That business is going to continue to get bigger, folks. That's the real bottom line, you know. So
and they $1 a share dividend, I think quarterly.
That's a big number, man.
How do you? I was just interesting, Tom. Do you track lumber prices? You know, board feet of lumber. What are you seeing there?
Let's take a look. So, right now, we're at 373. Okay, so this baby's come down from 468. Let me put this LB1. Let me put it on a generic chart. Okay, so bring this back 15 years. Okay, so all you've done is pull back to the breakout area. Interesting, man. So we're at 373. We hit a high of 659. So lumber in general is pulled back 50%. It's pretty wild. And more than likely, I would say what that has to do with is the West Coast. Just like when I was bringing up Toll Brothers, you know, there's markets that are in trouble, folks. I mean, you know, the bottom line is that there's markets that are overpriced in a big way. So that would be saying that, okay, you know, there's less lumber there. You know, that being said, you know, can lumber basically get down into this 340 area? Yeah, I think it can. You know, so I think we're at a price level, and you can kind of see it in the home builders. You're at a price level that these higher average priced houses, okay, and they're going to be bigger houses and they need more lumber, are going to stay slower. You know, because this is going to, you know, this, even though the market wants to bounce, this let's picture. Most times, folks, if you got an $800,000 house, you got a $1.2 million house, your probability of being in the marketplace goes up pretty dramatically, right? And then, that being said, well, guess what? You basically turn around 2 weeks later and you're down 20%. That affects your thinking. You know, I tell the story many times. You know, when you have a couple $1 million, people say they're broke, and what does that mean? They're broke and they have $500,000, or they're broke and they have $1,000. But most of the time, they say they're broke and they get $500,000. Well, you know, the reality, the man and the woman on the street, when they say they're broke, they're really broke. So, you know what I'm saying? But they won't spend it.
Yeah.
That's my point. You know, they say, okay, I feel like I'm broke. So,
yeah, the mentality.
Yeah.
Well, hey, Tom, good chatting, and
so glad you're in Cape Coral, man.
Yeah, it's a blast. We're gonna have a lot of fun. The rest of the family's coming down here on Thursday, Friday. So we'll have 10 of us down here. You know. Awesome. Supporting that Florida economy.
Thank you. It's a beautiful thing. Okay, man. Have a great one. Have a safe one. Dow right now up 357. NASDAQ up 160. S&P's up 43. Let's go look at those S&Ps because it's having a tough time holding this. And let's see what we're going into right now. So we take a look at this. Okay, so we went down with some volume. That last bar. Oh, I see, but where you were at 10 o'clock last night. Okay, so this market, now this S&P has to get back inside, folks, the 2803. Right now you're at 2793. Yeah. Our phone number is 877-927-6648. Dow Industrials right now up 360, NASDAQ up 166, S&P's up 43. We're coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 276, NASDAQ up 142, S&P's up 34. So the S&P's, folks, are just about 96, well, they are 96 points off its high, and we'll see where this baby's going to shake out. When we talk about, you got basically Europe just basically erased a whole 4% up number. So as I said a little bit earlier, we were still much stronger than Europe. The real question is that we're going to stay there. When we take a look at the aspect of virus-wise, okay, you have a rolling battle right now, it looks like on CNN, as well as a few of the other stations. The rolling battle has to do with, you had the head of the basically, Azar, the head of the health, come out and say that there's plenty of tests out there that have reached the States, and then right after that, you basically had Como come up from New York saying, no, we don't have enough, okay? That's what you see rolling this market up and down out here. So the real question is, where is the facts in between both of these? And you can expect that market's going to keep rolling. You have Putin. Putin is going to be basically their top king in Russia to 2026. We're going to see that in the next few days out here. He's changing up the whole structure. And let's just go back to the S&P for a second before we finish this hour up and we come into Think or Swim. So if we take a look at these S&Ps, on the 10-minute basis, what you're going to see right here, folks, and this is going to be hard to break down. Not hard to break down, but 2777. We're 10 points above that. What that number is, that's where the huge downdraft came in at the close yesterday. I don't think we're going to break it. I think that's it. I think what you're going to see here right now, that you're up 41, that you're going to start charging forward as we go forward in the marketplace today. Have a great one, folks. Have a safe one. Stay right there. Think or Swim. Coming up next, Basil Chapman, Steve Rhodes, Dave White will be back this afternoon. Look at him, folks.